on. All right, and then we'll go over that. So I heard some great things as far as understanding market up charts. And Ms. Bernadine, you had some great examples on that as far as the time frame. We're going to talk about when to mark up on a certain time frame, and really it's not going to be that complicated. It's really preference wise, but we want to look at each time frame separately. And then of course my big brother Daryl here, he talked about precise entry, so we'll look at that. If you're on a bigger time frame, your entry doesn't have to be as precise, but we're going to really try to narrow that down so you can start getting good entries on that. Okay, and then we'll just kind of cover some other things. And again, you know how we do. This is interactive, so you guys can interrupt me and jump in, ask a question if there's something you don't understand, something you want more clarity on, and we can kind of go from there. So let's see, we're going to jump on a Tradingview, of course. Let's close this. Let's get on our Tradingview. Okay, so everybody's kind of somewhat familiar. If you're new, again, Tradingview is just an online application here that you can access here, which will help you to mark up your charts. It's just easier because it's got a lot of drawing tools on here. A lot of the I Am Master Academy educators use this, and people outside use this to mark up their charts. So, all right, so let's get into the whole markup thing, and then I will touch base on our team strategy. It is one that I facilitated in developing called the TWB Strategy. Most of you know it, but I will touch small amount of time on that to introduce that again. And if you have questions on that, we can go ahead and touch base on that. And then doing that, I can show you how we can use the TWB strategy or any other strategy with the markups that you do, okay? So right now we're in the Asian market. I pulled up USDJPY, and typically for me, I like to start either on the daily or the 4-hour. Now let's break this down for you, Miss Bernadine. I'm going to kind of go with the time frames and kind of define why we may mark up on certain time frame, and then that'll give you the whole concept of why we even mark up charts. Okay, so first and foremost, the reason that we mark up charts is we want some sort of physical representation of the highs and lows of the market, okay? Once you define the high, the very high prices and the low price action of the candles, okay, then you'll understand that you can enter and exit anywhere in between your high and your low. This is why we mark up charts, because what it does is kind of like on a football field, okay? You know, I love giving examples. Ooh, look at that buy candle on USDJPY on the 4-hour. So like on a football field, we have different yardages that are there. You know, you go from 0 to the 10-yard, 20-yard, 30-yard, and you could fall anywhere in between, okay? So the goal is always to get to the next 10 yards and get another first down, okay? You get 4 attempts to do that. Well, trading kind of works somewhat like that. When you do your high and your low, your support and resistance, when you have your resistance on top, your support on the bottom, you want to start gaining yardage in between, okay? Your goal is either if you're on the bottom at a support and you're going up to your resistance, you have different places in there where you can gain your pips. If you're a scalper, you can, in between that support and resistance, you can go 10 pips. Maybe your take profit is 20, 30. It just depends on the range that you're doing. So for example, let's say we have a support and resistance and there's 50 pips in between the support and resistance. So now you have an area where you can enter in, you can do 10 pips at a time and at least get 40 pips out of the 50, okay? Maybe you want to do 2 20s, you know, you want to do a 20 pip and another 20 pip, okay? Maybe you want to break up in 5s, okay? But until you outline your barriers, okay, or your yardages, you really don't know where you're going to jump in there, okay? And that's the whole reason why you want to mark up charts, okay? You mark it up to find where you can jump in, and it'll let you know how far can you go, all right? I usually give about a 5 or 10 pip cushion from resistance and from support. So what I'm saying is that sometimes when it starts, see, let me make sure everybody's muted. When your trade starts, okay, guys, I want to jump in maybe when I see it heading in the direction toward my resistance. So I first need a confirmation, and we'll talk about that when we're talking about precise entry. There needs to be some sort of confirmation to know when to get in. And usually you won't see that confirmation until you're 5 or 10 pips in that direction. Okay, I hope that makes sense. So you'll have an entry, you'll have a support, and generally you're not going to jump in right at that support level. Okay, you're usually going to have to be 5 to 10 pips out of that support to confirm that it really is going in that direction, and not just doing what was I going to say, um, a flag or checking that support area. You don't want to just bounce and then head back down and go the opposite direction. You need to wait for that confirmation. So let's go ahead and start, and I'm going to kind of go from there. So to answer Ms. Bernadine's question, why do we, on different time frames? Whatever time frame that you would like to base your trades on, like if you like trading on the 15-minute chart, then guess what? You need to mark your chart up on the 15-minute chart. Okay, if you're on the 30-minute, then you do it on there. If you're on the hour, mark it up on the hour. Okay, because this is giving you data in real time in the time frame that you're in. Okay, now of course, like she said, some people will mark it up on a 4-hour or a daily, but then they'll enter in on a 1-hour. Well, what you're doing now is you're increasing the real estate in between support and resistance. You'll have a greater space. For instance, if I mark this up on a daily chart, that could be 100 pips between the support and the resistance. But if you're only getting in on a 15-minute chart, where normally you're only shooting for maybe 10 to 20 pips, well, that's a lot of land to jump into. It's too big. Okay, and so what's going to happen is you'll jump in on that 15-minute, but it'll hit a 15-minute resistance area, and it could bounce down, and then you'll be in a pullback, and then you're wondering, well, why did it reverse on me? Why am I negative 15 pips? Because that's not what you intended. You didn't want to do that unless you're really trying to trade on a daily time chart. If you're on a daily time chart and you mark that support and resistance, then a 15-minute pullback is nothing. See, there's different um, psychological cues that go with each time frame. A long-term trader thinks differently in their trades than a scalper or an intraday trader. Okay, see, a daily trader, we're going to talk about that a little bit. They expect a 30 pip drawdown. They expect that it could pull back 40, 50 pips. They're prepared in their accounts to get a drawback that big. A 15-minute trader, okay, a scalper, is not looking to go negative 30 pips. And that's where some of us get caught up, because it does happen to do that, and then you're like, oh my God, I need to jump out of the trade. Well, that's because you're in a different mindset. Okay? So mark up the chart in the time frame that you will spend your most time in. Okay, if I trade 15 minutes, there's no point for me to really mark up a 1-hour chart, because I'm never going to really be in a trade longer than an hour. Okay, or at least I'm not trying to. Okay, I'm really looking for that support and resistance on the 15-minute, because that's where I'm spending most of my time. Okay, now you can find your entry, your very precise to the minute entry, you can find it on a lower time frame. Okay, you can find it on a 5-minute or a 1-minute if you want to get precise. The time frames help you with precision. Okay, the lower time frame does not affect you if you're on the 15-minute. What you're seeing is what you're seeing. It's kind of the same if we're, let's see, if we're putting carpet on the floor, okay, and we're in a 5-foot by 5-foot room, okay, it doesn't make sense that I have to know the whole square footage of the house. The whole square footage is probably, let's say, 1,500 feet, okay, but I only have a 5 by 5, which is a 25 square foot room. I'm only concerned with putting carpet in this room, okay? So that doesn't mean I need to bring in carpet for 1,400 feet, right? Or 1,500 feet. I don't need to bring in that much carpet. I want to go maybe just a little bit more than 25 by 25. So that means I might bring in, maybe I'll bring in 60 yards in case I got to cut, make a mistake, add something, whatever the case may be. So this is the same way we think about marking up the charts. There's no need to go and mark up on a giant time frame if all you're trying to do is do a small bit of pips. Okay, you're overwhelming yourself, and that's what happens. A lot of us get intimidated because we mark it up on this big chart, but we're only getting in a small time frame, and then we're wondering why these things aren't correlating. Same thing in that example of the carpet. I got a 5 by 5 room. Okay, I want to start putting in a corner or something like that. So now, to get a precise entry, I'll look at a 1 foot square of the floor, and I might say, okay, I'm going to start putting carpet in this one corner. It's only about a foot long, foot wide. So here's where I'm going to start. Okay, instead of just sitting at the room, you can't just throw the whole 25 square foot of carpet and just throw it on the floor. You're going to have to kind of start somewhere in a corner, on the side of a room, a smaller time frame or a smaller space. Same thing with your precise entry. You're going to have to start in at a 5-minute if you want to find that precision entry, but you mark up your 15-minute chart. So all right, so let's start here. Again, I was going to tell you we're going to kind of do something for the week, so you guys can get an idea of where the market may be going. So get your pens, papers out, because there might be a pair that you like to look at. And what we're going to do is we're going to look at pairs that you normally trade. We're going to mark it up so it can give you an idea of the sentiment of where the market may go this week, so that most of you will be winning most of your trades. Okay, so you'll have an idea of why it's moving the way that it moves, and then we can go to a lower time frame. USD JPY, I'm going to start here on a 4-hour. The reason I'm not on a daily is because I'm not looking for weeks on, weeks out. Okay, if I'm looking to be in a trade for the next, 3 months, 6 months, 8 months, then I'll get on a daily. Okay, because that's a lot. One day is one candle. Instead, let me do a 4-hour, because that kind of fits a little bit that I may be in this trade maybe for the next week. Okay, that's all I need. I need enough information just to last me for the next 7 days. So we're going to mark this up from Monday now until what Friday should bring. Okay, and then you can look at where you want to jump in. So right now, I start on the 4-hour. I'm going to mark up here on the top. Reason being, I got this high candle right here. I'm looking immediately over to the left. That's my high right there. And then what I do is I always mark up the same way. I start from the very top and I work my way down. And I'm looking for areas where at least 2 points possibly can connect, okay? I might put one here. And again, these don't have to be 1,000% correct, guys. These are subjective to you, okay? But this is kind of how, I kind of work it. Another question is people do you count candles? Yes, I count the candles. If the wick, I count it to the edge of the wick. You know why? Because that's where price is gone. Price actually touched down to the end of this wick. So is it possible it could go down there again? Absolutely. Okay, and let's go down here. Okay, real simple. Put those green lines there. Let me thicken it up for you guys here. That was a little thicker, so you guys can see it on my screen. Green is for that money. Want to make money. Oops. Okay, so that's the first thing. You can clearly see trends. Most of everybody that's on here, if you've gone through your I Mastery Academy, you should have at least passed the basic part where it talks about trends. Of course, we're doing support and resistance. That's the main keys here. So again, what you're doing is you're just going from level to level. That's all you're doing. This is the first floor, second floor, third floor. Was it 1, 2, 3, fourth floor, fifth floor? And all we're doing is we're going from floor to floor. That's all we're doing. And in between, ladies and gentlemen, is where you're going to set your take profit. Doesn't matter. Doesn't even matter. You just want to be in between these areas. That's it. You just want to be in between. Okay? Just want to be in between. And if you're somewhere in between, you're going to make profit. Okay? Now, to find the entries, we know that once it gets to this level, okay, it has to do something because it did something over here in the past. Okay? It came up here, rejected, broke through here, broke the support here, went under, came here again. It rejected. What does rejection mean? Rejection merely means that it did not break through that level. That level held, and it got rejected from breaking through. In other areas, it broke through. But what you'll understand is that each pair, it has kind of a style in the way it breaks through. Let's say me and King Najee over there, okay? All right. I love using an example. So let's say we want to break down a door, okay? We break doors down maybe differently, okay? He may do one big karate kick, boom, bust the door open, okay? That's how he breaks in doors. Maybe me, I might got a tough shoulder, tuck my head, I might just bump it with my shoulder, I break it through. Different pairs sometimes have a different way of breaking through. Sometimes they'll do maybe short candles that'll break through. Sometimes it'll be a long embellishing candle. And this is what confuses a lot of us because we're looking for the same thing on every pair. And what I've realized looking at different pairs is that it's not always the same. The retests aren't always the same looking. It won't always be one long bearish or bullish candle to break through. Sometimes it's just a series of candles that breaks through. This is why you have to have your confirmation in order. Okay? When you have your confirmation, you at least give it that first 5 or 10 pips on either side of the line to confirm whether it's going to go up or down. Okay? This is just what experience has kind of taught me. All right? So, all right. So we marked it up on the 4-hour chart. Okay? Well, I'm marking up on the 4-hour because maybe I'm a 4-hour trader. This is going to give me real time. This is what I'm looking at. So let's center right around this area. Let me blow this area up. We're going to blow this area right here. We're going to look at what does a breakthrough really look like. Okay? What does it look like? All right, so what happened is, all right, the market was coming back up. It came here, guess what? It got rejected. Okay? Got rejected because it did start to break through, but then it turned another color and it came back down. Shot a wick through, still got rejected. It said, nope, nope, I'm going to come through again. It came through. Look at this. These candles are just about the same as these candles. Okay? Body's not that big on either one. Okay? And let's see, just sort of a measure of, what was this, maybe a pip or something? Oh, not bad. On a 4-hour, that's a 7 pip candle. Okay? So both of these are about close to, 6, 7 pips each. All right? So now the question is, when do we enter? Okay, that's what we want to know. When do we enter? So on a 4-hour, obviously, this is 4 hours, but we want to be more precise. Okay, we see this green candle start to form on the 4-hour. We jump down to a 1-hour. Remember now, we marked it up on a 4-hour because this is the time frame I'm spending most of my time in. But I jump down to an hour, and we're going to see where our entry is. So here's where we're at. Okay, so let's say these 3 candles made up that one candle. So for my precise entry, these are 2 doji candles. Right here is another candle that came. This candle, okay, this might be my entry candle. This one might be. But I want to be safe, so I'm going to wait for a third. Usually for me, 3 candles is a good waiting to see if it's going to go in that direction. So that means for safekeeping, I'll probably enter on this candle right here. So out of that new candle that formed, okay, this was probably the end. Let's say this is the end of that red hour candle. This is the start of that new green candle. So you're right. I'm already waiting 1, 2, maybe 3 hours into it, but I'm going for a long trade, so I'm probably going for over 100 pips. So just to confirm, I'll jump in on this candle. And look what happens. It heads up, okay? And it's starting to head up toward this. And just for pip's sake, let's see. Let's go from the bottom. All right, so let me go. I'm gonna get it. I'm gonna get it. Okay, so we're talking roughly about 48 pips, okay, to the top. Okay, but it'll take a while for it to get there. Take 4 to 6 hours to go 50 pips. So not bad. but that's how we'll look at it on the long term. Okay, so we entered here, a few hours to get up here. So now look, spike hit. If you had your take profit maybe close to here, let's say a few pips off of that. Like I said, you want to give it maybe 5-10 pips off of that. If it was 5 pips off, let's say 10, I would make my take profit, you know, right here about 10 pips off. So let's say I just went 30 pips or so. Or make sure I'm doing it right. Where did I start getting in? Oh, I get in on that one. Okay, so let's see. All right, so yeah, so about 39, 40 pips. Okay, so that's just part of the marking up part here. You know, just letting me understand where the market may be going. I'm going to put my take profit somewhere in between here. So when I mark it up, I can measure it. This is about, like I said, about 48 pips or so. So I could make a 10 pip, you know, if I wanted to. But obviously, I'm on a 4-hour chart. So on a 4-hour chart, I'm not going to go for 10 pips. Okay, I'm going to go for something big, and usually I would be somewhere in the 50 plus area on a move like this. Okay, because I'm on a 4-hour. That's why people trade on the 4-hour, because they don't have the time, or they don't wish to sit in front of the charts for a long, you know, all the time, constantly. They don't have that time, so they go to the 4-hour to do longer trades. Or let's say they just like to be in for a couple of days. Maybe they're shooting for 100 pips or so, or 300 or 400. So that's typically why they're going to be on a higher time frame. Okay, so let's go to the lower time frame. Let's go to 15 minute, because most of you who are on here generally are on a smaller time frame. As a matter of fact, I want you to unmute to tell me what time frame is it that you normally trade. Somebody let me know, what time frame do you normally trade?
I normally
15
trade
an
on a
hour.
4-hour.
Hour, okay. I got an hour.
15 an hour.
Oh, okay. So we got a lot of hour
I trade
traders.
the 4-hour.
4-hour, okay.
Yes.
Okay. Anybody does this 15 minute, 30 minute?
15.
Okay, Bernadine, you do the 15? Okay.
Mm-hmm.
All right, cool. So let's go down to 15, and then I'll
Most
jump
of
to
the
the hour.
time.
Okay, most of the time. Good. All right. So we're on the 15-minute chart. All right. So I want to mark it up here, because this is where I will spend most of my time. Okay. I don't need to mark up an hour chart, because I don't need that much data. Okay. Now another cheat, like I said, you could always switch it if you feel, you know, you need a little practice um, on markup chart. You can switch it to a line chart, and it makes it a little easier. Okay. Then you don't have to worry about wicks and all that. So I'm going to mark it here. Let's see. Maybe here. Oops. Maybe down here.
So Shawn, as long as it has 2-3 touches.
Mm-hmm.
Okay, so these are all on the same time frame then.
All on the 15 minute. These are all on 15 minutes, because
Okay.
this is where I'm spending my time. Oh, come on now. Oh, why are we acting up? Oh, my chart wants to act up. Come on now. All right, let's get this again. Let's see. All right, there we go. Don't be that difficult. All right, so just a rough, nothing, you know, doesn't have to be perfect, nothing like that. All right. So now when you do that, you kind of see a little bit more clear as far as what you think you need to do on your 15-minute chart, right?
Mm-hmm.
So see, broke through here. Let's look right here. It did do a big bullish candle right here, broke through, and it did a retest. Okay, this is a lot of them will retest, but some of them may not. So a retest is it came up, came back down, all right, but it didn't go farther than the line that we had, and then it ended up going back up. All right, still iffy. Sometimes you really don't know. You just have to kind of go with your gut. But because it broke through, came back, and it did another embellishing candle, which was bigger than these two, this was a confirmation. This can act as a confirmation. This candle's bigger than the rest, so this lets me know, hey, look, I can get in on this one. And I might have gotten in on this small doji up here. Okay, I would have hit the pullback, but guess what? I would have trusted it and went up. And depending on if you're shooting for 10 pips, you know, you would have gone 10 pips. Let's say if I got in on that doji. Let me blow it up a little bit. All right. So you broke through on this candle, okay? And you're waiting for another green candle, because if this was a green candle, I would have jumped in on this one because it would have had some distance away from my support line here. But it didn't. It went red, so I would have said, nope. It might turn around on me. It might come back down, okay? But once I saw this one and I saw gold, then I'll say, okay, this looks pretty good. I'll probably wait on that one. That one looks good. And most likely my instinct, I would have probably jumped in on this right here. Ooh, yeah, I would have jumped in on that one. It ended up being a doji, but when it started, it probably was a full green candle. So I would have gone in that one, and I would have at least shot for, what do you go for, Bernadine? You go for 10 pips, 15, 7?
Yeah, 10.
10. So if I got in here,
So isn't that consolidation though?
it is, but I would have had to wait through it.
Mm-hmm.
Come on now. Always when I'm on Zoom, it'll mess with the. Come on now. Let's see if one more again. All right, so 10 would have brought me up here. All right, so yeah, I'd have been in consolidation, but eventually it got to the 10 pips. You know, I just would have had to wait. So that'd have been a while right there. It'd been a couple hours. Okay, so let me see what the time frame is. So 6 o'clock, 5, 1. So yeah, so this was probably our time was probably around lunchtime. That's why it took so long to go 10 pips, because this is around during lunchtime. So between that 12 to 2 o'clock, you would have been waiting to go just those 10 pips. But that's what my precise entry could have been there. I'm on the 15-minute, or let me see, I'm on the 5. Is my arrow there? Nah, okay. Yeah, so on a 5-minute, let's say it came up here, you could have got in anywhere along the way here if you saw it going up and forming. So when you say precise, as precise as be, you see the 2 dojis here, because you see the wicks on the bottoms will let you know that it was potential reversal here off of that. You know, maybe you could have gotten in on this candle. Maybe you would have gotten on one of these here in the beginning. You could have gotten in somewhere here and then rolled this up if you want a precise entry, okay? So the point I'm trying to make is you'll mark it up on the time frame that you're going to spend the most time on, and if you want a very precise entry, then you'll jump down one time frame to get it precise, okay? And then you'll pick from there, and then you'll get in. All right, again, no point for me to be on the 1 hour if I'm not trading on the 1 hour, okay, because that's too much information, okay? It's better if I'm on the 15-minute to trade on the 15, I mean, to mark it up on the 15-minute, okay? So that's that. So let's go to the 1 hour. Bernie, does that help at all? Because I want to make sure you kind of got it.
Absolutely. Yeah, absolutely. Yeah, that's
Okay,
very good.
please slow me down if something isn't clear. So you kind of got that If I was looking at the 50-minute, I want to enter. Let's say I didn't look at the 5-minute. There's nothing wrong if you don't get in on the 5-minute. Let me say that is within the past couple of years that I know in I Am Master Academy that collectively as I've been learning that we just started looking at getting in on a lower time frame. That wasn't always the case. It used to be you look at the 50-minute, you get in on the 15-minute. We wouldn't even look at it. If you're scalping on a 5-minute, then you enter on a 5-minute, not jump down to the 1-minute. Of course, as we became more experienced, we kind of got this whole notion of being precise. We just have to get the precise entry. Well, I don't really put a whole lot of pressure on that. As long as you get in on the candle that you need to get in on, you're going to be in profit, and then you can kind of ride it to where you need to go. But again, if you need that precise entry, then yes, you'll jump down to the 5-minute, because you can be more precise and jump on a 1-minute, if you really want to get that technical. Okay, but the point I'm trying to get is you don't have to rack your head on, oh my God, I should have gotten in on this one, because you're on the 15-minute, and because you get in on the candle that you're supposed to, you have more information at your disposal. You have a solid 15-minute candle, so that solid 15 minutes is letting you know you're solidly going in the direction that you're going. More so on a 5-minute, because you'll have 5-minute and you'll have two, one or two that are green, then you have one or two that are red, then another two that are green. And see, that can be confusing to you. You're like, well, should I be in the trade? Should I jump out the trade? I don't know what I should do. Instead, really concentrate on the time frame that you're on. Okay, and that's my opinion. That's just helped me with trading. Now look at this. Okay, example, came here, it rejected, okay, but don't know if it's going to come back down. We have to wait. We have to get that confirmation. We're on a 15-minute. The second red one is coming. Yeah, this may be our confirmation. Might be. I want to see this, though, break this bottom of this green candle. Okay, so I may not get in on that one. I may get up on the next one. Okay.
Dairyland, but it's not accepting my card.
I'm sorry, somebody have a question?
I don't know. It keeps saying check the card. I wonder if it's because it's a gift card.
All right. Okay, there we go. Hope you get your gift card straight. Okay, so as far as our confirmation, what I want to wait for to see is if it's going to break the bottom of this green candle. Okay, that'll let me feel a little bit more warm and fuzzy if this candle breaks that. Now, for those of you who like pending orders, that's how you'll determine if you want to put a pending order in. Okay. Okay. If you want to put in a pending order, you'll put it or put a call level. This is what Ms. Bernardine, you were asking. So call levels is an application, a mobile app that you can download onto your phone. Okay. And what it does is you can put whatever pairs that you want together. So you put USD and JPY together, and you have a sliding scale on it, and you'll set it at the price that you want it to alert you. Okay, and then you actually put notes in there. So that's what I would do. I would put notes in there that says, look for a sell when it hits this price. Because I may be putting several alerts in, or because I'm trading different pairs, and I want to keep up with what I'm doing. So what it'll do is it'll just send you a notification saying that the price was hit. And then I would see the note, look for a sell. Now I could go ahead and now that it hit this price, okay, that's underneath this green candle, it may be coming down, so then I can set my take profit. I might set my pending order at this price because I want to know when it enters me into the trade so that I'm aware. And then I may set my take profit for 10 pips, 15 pips, 20 pips, whatever it is that you want to do. That's how you use call levels in conjunction with your trading.
So this might be a stupid question, Shawn.
Not at all, not at all.
But how do you know where to set your level, your call level at? I mean, are you just looking at the chart and saying once it breaks through this point, then that's where I want to get in at? So that's where you set it, or?
Yeah, exactly. Yeah, exactly.
Oh, okay.
Call level is just it's like an alarm for your watch. It just want to tell you when it hits the price. Doesn't tell me what direction necessarily. It's just going to alert me to when it hits that price.
Okay, and then you can determine. Okay.
Exactly. You determine, whether it's a buy or sell. I just want to know that it came to this level. Okay.
All right. Okay.
Or maybe I might set a call level maybe right above my resistance here to let me know to look at it for a buy. Okay,
Yeah.
so not only do I want to break this point, but I might want to go a few pips above it. So when there's a higher candle, let's say I'm at work or I run my child to the doctor, whatever, boom, I got the alert. I open up my phone. Oh, it broke this level. So now I can see my confirmation candle, and now I can jump in it for a buy.
Okay.
See?
Thank you.
So now pay attention to this. You see how this is bouncing off of this yellow line that I put? You see why I say put it underneath the candle? Because it could just match up and go there. But look,
Yeah,
it's breaking through.
it's already breaking through. Yeah.
But I'm going to have to, but for me, I'm going to have to wait to see how this finishes out. Okay. If I see another 50 minutes and it's red, then I'll probably enter as soon as that one is red. Okay. But like some people say, you could go down to your 5 minute and you can see what's happening. See, for a more precise entry, if the next one, let me see, we got 30 seconds on this candle. Do I have 30 seconds on the 50? How long I have on the 50 minute? I have 10 minutes on this one. I want to see how this finishes out. Now, like I said, some people may get in. That's your prerogative. But if you really want a confirmation, see how many pips I did have to give up, though? I did have to give these up just to confirm because I could get in and it could turn around and shoot back up because it didn't pass this level yet.
Right.
Okay? But Shawn, you're giving up the pips, man. You're giving up the pips. Well, hey, peace of mind. Now, okay, so let's see. So this is a new one. See, look what happened. See, I don't know. See, this one turned green on me. Could have jumped in too early, possibly, or this could turn red. So these are the things that we look at. And you see here, you see this was, like you said, this was consolidation. It may get hung up right here. It may just be hung up around this line. I have to kind of wait and see. But since I concentrate mainly on the 15 minute, I'm going to wait on the 15 minute to confirm. So I got time. I have 9 minutes on here. Okay. Now, granted, if I set a pending order, I'm already in the pending order. It already committed me to the trade. See, because if I had set it there, it broke it, I'm already in the pending order. So now I'm kind of committed to the trade. I have to hope that it's going to go down, but it could go back up on me. Okay, so that's on the 15 minute. Now, let me know, do you have that part, Miss Bernadine?
Yes. Yes, I
Okay,
do.
good. Okay. So, I want you to keep an eye on that. We'll see what the next candle is. We're on for the next 8 minutes. See if that's going to be. Now, if that beginning of that 15 minute is a red, guess what? I can drop it on down. And let's say it starts here. Okay, I got 12 pips. I can do a 10 pip move in there, possibly. Okay, very possible. So let's go to an hour. All right, so on the hour chart, even though I marked it up, did I mark it up on the hour? Can't remember what I marked it. I think I did. I think I marked it on the hour chart. So now we see it broke. We're doing that. Because I'm on an hour chart, I'm concerned on the support resistance on an hour chart. Okay. But like you said, if you want a precise entry, yes, you can go down to a 30 minute and be a little bit more precise as far as when you want to get in. If you're going in for a sell. If you're going in for a sell, I could jump down here and wait for the next 7 minutes. If another 30-minute candle is red, it might be my entry to jump on in. Okay, I just go one time frame down for my entry. I don't go all the way down to 5 minutes. That's too much information. And that's what happens to a lot of us. We inundate ourselves with way too much. Okay, it's not necessarily the entry has to be perfect. It's that you just want to get in the current. If it's heading in a downtrend, just get in somewhere on the downtrend after you confirm it's in a downtrend. Okay, does everybody have that? That's the thing I think that bogs us down is everybody wants the perfect entry, I even see people advertise that. Let me show you how to get the perfect entry. Let me show you. There is no perfect entry. You get in when you get in. The point is, do you have a great exit strategy? Can you get the 10 pips that you want? Can you get the goal that you want? After you've done your analysis, can you get 10 pips out? Because me, Bernadine, Miss Betty, and Najee, we all can see the same trade, and guess what? Neither one of us will get in at the same time. We'll all get in at different prices. But I bet you we all, if we did our analysis right, we all could probably get our 10 pips. Najee may get in early. Okay, fine. He got in right before this next candle. He decided I'm going to chance it. Okay. Miss Betty says, okay, I'm going to wait. As soon as the next candle starts, I'm going to jump in. Okay. Miss Bernadine says, well, I'm going to wait for some of that red to come through. If it comes down a couple pips, then I'll jump in. And Shawn may say, you know what? I'm going to wait until, you know, maybe the end of that candle, and then I'm going to jump in. Nobody's wrong. Nobody's wrong. The point is, you did your own analysis. You said that, hey, it's heading in that direction. As long as it executes correctly for you and you get your 10 pips, you got in at the right time for you, because everybody's going to see it a little differently. Okay? Anybody have any questions on that? Or anybody have any friendly criticism? I know there's very experienced traders that I have on here. I know some people have different philosophies on that. So I'm willing to share that. We're all learning together, and I'm not perfect by no means. I lose trades too, guys. Anybody have anything they want to share?
Hey, Sean.
Yes, ma'am.
Okay. When you mark your charts up, do you always start from the top and work your way down? Because I do the opposite.
I just do the same over and over. If you start from the bottom up, then just make sure you repeat it that same way. That's
That's
really
the
the
way I
point.
do.
Yeah.
Okay,
Yeah.
cool. Thank
Don't have to be. That just lets me know I haven't forgot anything. Like, oh, did I do it? Because if I bounce around, I may forget to look at something. So whatever your way is, do it the same way over and over again. And that's the thing, is systems. So doing things systematically in trading will help you win more. Just like we had talked about a couple weeks ago about entering the trade, the steps, the confirmation that you do, like checking your strength meter, checking Forex Factory, making sure you look to the left for your support and resistance, and then getting in. I always do the same thing every time I enter a trade, so I don't miss something.
Right.
Okay.
Thank you.
Yes, ma'am. Anybody have any other questions about the marking up part? Now, this is basic. You know, I didn't get into trend lines and breaking the trend line and all that other stuff. But, you know, as you continue to study, you'll get that. We may cover that, you know, at another time period where, you know, oops, I didn't mean to put it there. You know, you have a trend line and you break it. Why are you up there? You know what? I'm not going to fool with this. Trading be acting crazy tonight. So anyway, if you have a trend line on the bottom, you can set up to where, you know, it breaks the trend line. You'll also can get an entry that way too. But really, you can see it here. You just need to wait for another red candle, you know, and then you can confirm that it's going to head downward and, you know, get your pips out of that. All right. So now, if nobody has any question about the marking up part, any questions, anything at all? All right, so let me recap real quick, and then we'll move to the TWB strategy real quick. And that is, again, whatever time frame it is that you spend the most time on, you mark up your support and resistance on that time frame. Okay? If you're a 4-hour trader, mark it up on the 4-hour and follow that support and resistance, because that's real time, that's real information, and that's going to give you more accuracy. If you go to a too big of a time frame, you're not going to be as accurate for your entries if you've gone too big. Okay? So that's it. For a precise entry, yes, you go one time frame down to get a more precise entry. Okay, but it's totally subjective. You guys can go all the way. You know, some people want to go all the way down to the 5-minute to get that precise. But again, you inundate yourself with a whole lot of information, and so sometimes you don't have to overcomplicate it. Just find a space between your support and resistance that looks good and enter once your confirmations are met, whatever your confirmations are. Okay, some people need to see a bearish candle. Some people need to just see 3 candles in the same direction and jump in. Some people, their confirmation is 2 candles in the same direction and then get in. You know, whatever your confirmation is, do that over and over again. Okay, and you'll start, you know, having more confidence in your trades that way. Okay, so if nobody has any questions on that, then we're going to touch base on the TWB strategy real quick. Again, that is our team wealth builder strategy that I use, and it's very, very simple, very easy. Let's go over that. Everybody okay? Everybody hanging? Still got everybody? All right. Appreciate you. Appreciate you. All right. Here we go. Now, is Miss Deborah on? Miss Deborah. I want to see if Miss Deborah's still on. Deborah had to go. Let's see. Yep, I guess Miss Deb had to go. All right. Does anyone have any questions about the TWB strategy? Is there anyone that has never seen this strategy before? No? Everybody's familiar? Yes, no, maybe so?
I've never seen it before. First
Oh,
time.
all right, all right. So I'm going to be speaking to you, Mr. Craig Turner, okay? Let's see, let me check
Well,
the chat.
Shawn, I would like to know.
Oh,
I would like to know a little bit more about it too. I've seen it, but I really didn't get the gist of it just
okay,
yet.
cool. I'm going to touch base on it, and we're going to go from there. Okay, so let me get on the 5 minute. Go to 15. Oh, no, let's see. Most of you guys said you're an hour trader, so let's go on an hour. Okay, so very simple. The only thing we have are 3 indicators on this strategy, okay? 3 indicators. We have an 8 moving average exponential. 8 moving average exponential, okay? 8. That's the magenta pink line. That's the number 8. Then we have a 50, 50 moving average exponential also. Moving average exponential, okay? First of all, why is it exponential? Because they do move faster. Okay, they do move faster. For those of you who didn't know, exponentials move faster. Okay, so calculate a little quicker for you. Okay, and then on the bottom we have our average directional index indicator, or ADX as it's called. Okay, so I'm going to start on the top and then we'll move to the bottom. So basically, why I really like this strategy and how I came up with this is I did see this strategy out before, but it was kind of used a little differently. But I like the simplicity of it, and I kept it simple for people who are just being introduced into trading. Not only that, it definitely helps you move on price action and momentum. Okay, more so on the momentum side. So basically, what you just have to know, I know everybody here has a basic understanding of moving averages, is basically when the pink line is above the 50, okay, we're looking for nothing but buys or green candle, okay? When it's underneath the 50, we're looking for sells. We're looking for nothing but red candles, okay? Real simple, that's it. The blue line acts like an equator, kind of cuts it up from the northern hemisphere from the southern hemisphere. But the real reason why I like the ADX is because sometimes there's a lot of indicators that I've seen that have too many moving parts to it, okay? Sure thing, Alex. So there's a lot of moving parts to the indicators and stuff. You got PSARs, you got this, you got Bollinger Bands, you got the stochastic RSI and the ADX and this and that, MACD, and people put them all together. And the one thing I want you to remember is, number one, that indicators are always lagging. They're always lagging behind because the price action has to happen first, then it does a calculation, and then indicator is formed. Okay, so it's always lagging behind. So I've learned to not really depend as much on indicators. Okay, they help, but remember they're always lagging behind. Even for PSARs, I've even used PSARs where you have a PSAR flip. Okay, that's the little dots that you see on some people's stuff. By the time it flips over, you've already had at least 2 candles that probably already moved in that direction, which could have potentially been 5 or 10 pips. Nothing wrong with that. It helps in the confirmation, but just remember that it does lag behind. Okay, and so with this, it allows me to segregate or departmentalize my mind to look at one set of candles versus another. So when the pink is above, I know the only thing I'm concentrating on is the green candle. I'm not worried about the pullbacks, or I'm not trading pullbacks. Let me say that. And then when it's underneath, I'm looking for nothing but sell. I'm not looking to trade the pullbacks on that. Now you can, but again, I want to keep it simple so you have more success. All right. On the bottom, okay, we think of these little areas that are marked off. Okay, we got from 0 to 25, from 25 to 40, and from 40 to I guess 80 or 100, whatever the top number is. And so each of these areas, we're going to call this the weak signal area on the bottom from 0 to 25, a medium strength area from 25 to 40, and then the strong area from 40 on up. Okay, what I'm looking for, we have the green signal line here. This green signal line corresponds with the green candles, and the red signal corresponds to the red sell candles. Okay, and then the blue line, this is going to be kind of like a strength meter, kind of like how a strength meter would be. It's going to tell me how strong of the trend it is in. All right, so now let me bring this together. So right now, this pink line crossed over the blue, so we're looking for buy candles, green candles. I look down here, all right, and I see that the green candles are at a medium strength, okay? And I'm concerned that the red candles are very, very weak. That's great. That means, hey, I don't really have to worry about a lot of pullbacks just yet because this is very weak. This is medium, all right? For my entry, what I'm looking for is I'm looking for this blue line to touch the 40 and go above the 40. Okay, kind of like how stochastic kind of works. Like when it breaks over the 80 or whatever, I want this one to touch the 40 or go over the 40. That means that I have strength in this trend. Okay, it's pretty strong. And if we do, look what happens. If I line up this green, this blue line, I'm sorry, to my entry candle, let's put a line here. Let me just go right here. Let's line it up. All right. All right, so when I line that all up, this is where I'm going to enter. I'll enter on this candle. I've seen this candle crossed over. That's good. This one started to come over the 40. Or let's just say, let's say that's just barely touching. Let me move it over just a little more. Um, let's move it here. I want to be better on this one. There you go. All right. So, okay, it's aligned with the red, but obviously I wouldn't get in on the red because I'm looking for buys. So after this, my blue line touched the 40. I see that there's medium strength here. My red is real weak. I like that. I get in on this doji candle here. And then I'll go ahead and ride this on up. All right. The two things I'm looking for is one, I'm looking at where my blue line is. My blue line is going up. So this lets me know, hey, this is a pretty nice strength trend. There's space between my green and my red, so it doesn't look like there's going to be any crossover happening anytime soon. But not only that, look at the space between my blue line and my pink line. It's starting to widen up, which means it's going stronger in that trend. As it widens up, that means it's going stronger in an upward motion, okay? And so with that, let's say if I were to enter here, oops. Okay, enter here and ride this up. Okay, this is potentially 73 pips. Okay, and we're on a H1. Okay, so this is a long-term trade. And what I want to say is in between this doji and this candle here, count how many green candles there are and count how many red candles there are. Let me see, I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 green candles, and I have 1, 2, 3 red candles. Okay? So what that helps me to do, and plus it hasn't broke this pink line. So this pink line actually acts like a support line too. So as long as this is riding along this, and as long as this blue line is above and my green line is away from this red signal line, I can stay in this trade. Okay? If I was on my growth chart and I'm going 10 pips, that's 7 times of my growth chart I could have gotten in. Okay? Again, the reason I like it is because it makes me departmentalize and just focus on the green candles. I'm not even concerned about the pullbacks. And I'm not worried about the pullbacks when it does. When it makes this red candle, we start getting nervous. Oh my God, I don't know. I think I'm going to get out. Well, if I look down here, my signal is still strong and my red is still very weak and my blue line is still above. I have no reason to get out of that trade. Now, if it broke the pink line, if it went past, then yeah, I'd probably get out. But it didn't, and it stayed in, so I could stay in the trade. Okay, so just on that little piece there, are there any questions about the strategy before I look at some more examples? Daryl, Lamont?
No, I'm good. I'm good. I'm just following.
Okay, good. All right, so let's go back. Let's find another one, okay? Okay, so here's one. We see this one came under as a sell. Okay, so I'm looking at nothing but red candles. I see my red line is just above the medium strength. Okay, not optimal, but it's not bad. And then, but my green line is to the bottom. I like that. It's very weak. But now this blue line peaks over the 40. Okay, when it does that, I'm going to get in. So let's say I probably would have got in somewhere right here. Let's move that over. Okay. So now it peaks over there. Let's say I want to enter. I entered on this small doji candle. Yep, pulled back on me. I'm not worried about it though, because look, it's getting stronger. That means that red, whatever color is closest to this blue line is the one that's getting stronger. Okay, so I stay in here. I write it down. Now where do I get out? I get out once it breaks. Now let's say this one is still red. It broke, but I wouldn't get out. But let's say this green doji candle comes and breaks it. Maybe I'll get out of that one, or maybe this one, I'd get out. Oops, let's see. Let's see how many pips that is. So 45 pips. Or let's take it back. Let's say I got out. I let it go to where it broke. 22 pips. Not bad. The reason why I like this strategy because it kind of takes a lot of the pressure away of, what the indicators are telling you. You can simply see it. Here's a pretty one. I really like this one. Look at this one. Green is in the medium strength. Red is all the way down here. There's space in between here, but now it peaks over the 40. It touches the 40. So I get in here, and look at this. I can ride it to the top. $147 pips. Never broke that pink line. Not until it got here. So once it broke here, I could have gotten out and said, oh, okay, I'm out. So even if I did that, that still was 103 pips. Now these kind of peaked above a little bit. You could have maybe did that. But what I'm really looking for is I'm looking for the ones where it touches the 40 or breaks the 40. See this one? So it was red. Red was up. It touched the 40. So I probably could have got in. It got a little stronger, did some waves. Let's say I got in here. 53 pips there. And you see every so often you see it. You see a nice little, see this is a nice little one right here. Not big candles, but still would have got some pips out of that. Still 53 pips right there. See, catch it on the peak. Right here. Let's find another strong one. Let's see. See, this is good. Look at this wave right here. This wasn't a bad move right there. $586 pips on a 1 hour. So yes, you can use this for scalping. You can use this for long-term trading. Doesn't matter what time frame. You can use it on anything. You can use it on US 30, GR 30. You can use it on gold, silver, oil. Doesn't matter. Okay, because it's all tied into the strength of the trend, and that's really what it's all about. You're really trading in a trending market. If it's not trending, then hey, why are we trading it? And the thing is, this tells us kind of the strength of that particular trend. And it makes it simple because all I have to do is pull up a chart. If I don't see this blue line touching the 40, I don't even pay attention to it. I just move to something else. Like if I pop this up now, let's say we never looked at it, I see this, I say, ooh, this is going up. Okay, this looks pretty good. So yeah, I'm on a 1 hour. Yeah, I might drop down to a 30, see what it's doing. Okay, it's forming a green candle. That's cool. Okay, right here, it's still at the 40. I kind of want to see if my green line is going to turn up, but pretty much it's got space in between. I may just jump in and get a few pips out of this. Okay, because it doesn't look like it's breaking this pink line just yet. It looks like it's going to make that and continue going up. Okay, any questions? No questions? All right, well, just as a reference, guys, we do have, of course, Team Wealth Builders. We have our own YouTube channel called Team Wealth Builders. And the TWB strategy is under our training, so you can go look back. We have 2 videos on the TWB strategy, which goes in depth about the strategy and looks for examples. So you're welcome to look at those and get a little bit more insight into the TWB strategy. You can use these on your IM products. You can use it on your web analyzer. You just have to switch it around a little bit. You can use it on your harmonic scanner if you want, and just add those indicators in, okay, and it'll definitely help you out. And then of course, if you just trading on your own without any tools, this is definitely a very easy and simple strategy to use on your own. We have several people in the Richly Traders group that are rich. So let me get it straight. Is it Richly Elite? Let me make sure. Yes, the Richly Elite Traders group that use this and a couple other strategies have been doing very well in their demos and their live accounts and stuff. And a few of the people never had any formal training in Forex as far as the basics. And so being a brand new trader, you could jump right in using this strategy. As long as you understand what you're looking at and that this line is over the 40, you can make a whole lot of money doing it. Okay. So now, anybody have any questions, any comments, anything that I need to go over? Any questions about anything? Mark up charts, doing anything? This works the same way. You still want to, maybe mark up your chart. Know where your support and resistance areas are. Okay. See, real quick, this is something that I may do right before I jump in a trade. See, real simple. So even though the indicator is showing me that it's strong, I still want to pay attention to this area because it still can reject. Because remember what I say about indicators, they're always lagging. So by the time, this turns around and starts heading in another direction, this ADX may take a minute for it to react to it turning in a direction. That's why a lot of people are like, man, Shawn, I jumped in and it just all of a sudden turned. Well, you still have to respect structure, okay? All the indicators telling you is that you're speeding to a brick wall. It's up to you to find out where the brick walls are, because this is going to tell you that you're going 80 miles an hour. But once it turns direction, then the indicators start to turn afterward. Then it'll tell you that you're going 80 miles an hour in the opposite direction. Okay? So I still kind of pay attention to my structure prior to getting in so I know how far am I going to go. See, if I caught this trade when it was down here, okay, down here where this doji was, okay? And my support, my resistance is up there, and my blue line is over the 40, my green line looking good. Well, now I know I got a lot of room to play. I know I got a lot of pips I can get now because I have room between here and the ceiling. I have 57 pips. So I can jump in this at least 3-4 times, 10 pips each, and knock that off my growth chart, okay? All right, guys. Any questions? Any comments? Tamara, sister dear, you have anything? I know you're not feeling well. Did you get anything from this?
Did.
You
I
sure?
did. Thank you.
Okay, good, good, good.
I did.
Okay, good. Miss Bernadine? Miss Betty?
Oh, yes, absolutely.
Concentrating.
Every time I hear it, I learn a little bit more, Shawn. Thank you.
Okay, okay. So it's coming a little clearer for you. Good. I want to make sure you get some. Mr. Craig?
Yeah.
Yes, sir.
Does this help at all right here?
Yes, it did. Yes, it did.
Okay,
Very
good.
educational. Thank you, sir.
Awesome, awesome, awesome. Mr. Pitts? Okay. Flynn? Oh, I see my great leader, Miss Flynn Brown. How you been feeling, Flynn?
Shawn, yeah, I did hear you, man. Yeah, it definitely helped. I appreciate it.
Okay, good, good, good. All right, good. Big brother Daryl?
Yes, sir. Actually, you answered one of the questions I was about to ask. Can it work on multiple platforms like the
Absolutely.
scanner, web analyzer? So you already answered that before I could ask.
Okay, good, 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 good. Miss Jackie, Kim? Hey, Jacqueline Foster.
I'm good, thank you.
What's up, Kim? How you doing? You just be floating up on the line. Don't speak to a brother. Golly. How you been?
And I always don't think I'm the Kim that you think that I am.
Oh, look, doesn't matter. You're Kim to us, so that's fine.
Oh, I froze.
Rose.
Yeah, I froze.
Okay, we got you. All right,
Shawn,
guys. Yes. Hey, Miss Jacqueline.
yeah, I just wanted to say when you say you can go up 50 pips or just do 10 and do 10, I guess I was always wondering about that, but I guess it kind of makes sense to do 10 if you're doing a growth chart, because then you'll go back and then you'll change
Right,
your okay,
right, right.
versus riding just riding it, because it'll be at the same price if you just keep on riding.
Absolutely.
Right.
Absolutely. Because
Okay.
remember, yes, and I'm glad you said that. So that was one of the discussions there's a leader asked me is, changing your lot size between your trades. There's two different philosophies here. You can just gain pips, which is fine. You're growing your account and you stay steady that way, or you can compound. Okay?
Right.
So compounding is where you're changing the lot size every single trade. Okay,
Right.
because now you're really using the magic of compounding to aggressively grow your account versus you can steady grow it. And steady
Right.
growing is just staying at that same. So I wanted to make sure I explained that point right
Okay.
there.
Okay. Good.
Sure thing.
Thank you.
Flynn,
Hey, Sister Flynn, what's going on? I heard you've been under the weather.
I'm feeling a little better, and I had a accident today. So the guy swiped me, but I'm fine.
Oh no. Okay. All
Yeah,
right.
I have a question for you. I noticed that you were doing the training on the 1 hour.
Mm-hmm.
Is that your recommended? I know we could do it on any time frame, but I see more pips. And is that your recommended? And you could see the trend better. Is that your recommended?
No, we before you came on, we kind of took a poll of where most people were trading, whether they were on 50 minutes or an hour. Most people said an hour, so that's where I kind of stayed around as far as the training was concerned. So yeah, you could definitely use it on a 4-hour, daily, whatever the case may be. It doesn't even matter the time frame. I typically start using it actually, yeah, and you know, Flynn, when I first started, I used to start using it on the 5 minute. I really was aggressively using it on the 5 minute because that would help me get 10, 5, 10 pips in a matter of 5, 10 minutes, and I was in and out of a trade. So if you never tried that on a 5 minute, I recommend that you try it because I had a lot. I mean, continue to have a lot of success on a short time frame using the TWB strategy.
What's the difference in EMA? Is that 9 exponential close?
8, and 50.
8 EMA? Okay.
Yes, yes. 8 exponential close, and then the 50 exponential close. Okay.
Okay. Gotcha.
Good, good, good. Any other questions? Any comments? Anything I need to add more clarity to? Taya, I didn't forget you. I see you up there. Okay. Hey, Taya. Okay, guys.
Awesome training. Thanks,
Thank you,
Shawn.
thank you. Taya, I saw you unmute. Did you want to say something? Were you trying to say something? I see you unmuted. Mic probably not working. Okay. Not a problem, guys. Not a problem. Well, look, again, I appreciate each and every one of you. Again, this is something we've been doing for almost the last 3 years. Every Monday, 8:30 p.m. Standard Eastern Time. Team Wealth Builders, one-on-one trading. I love each and every one of you. Thank you so much for your support. And again, feel free to invite any guests on the call that you want. Again, we just want to be able to introduce some of the things that you learn from the I Am Mastery Academy and put it all together so it starts making sense for you. This is the place that you ask questions. This is the place where we make mistakes together. I learn from you guys just the same. I'm not a know-it-all. I just want to work at perfecting the skill so that we all can get to the other side of rich money. Okay, so that's the thing there. All right, so I just want to check everything in chat. Got everybody together. Great. If you have any questions, please feel free to send me a message, call me, Facebook me, whatever you need. And again, we'll just end tonight's call. Thank you so much.